Vishal, a very, very warm welcome to the Fisdom Wealthcast.
Thanks, Nirav, and great to be here as always. Thanks for having us.
So Vishal, it's always a pleasure interacting, and I'm just so looking forward to this conversation. Without any further ado, जनता का एक ही सवाल होता है, चाहे मार्केट ऊपर जाए या नीचे जाए, चाहे तनाव भरा हो, चाहे रिलैक्स रहे, एक ही सवाल होता है, मार्केट क्या बोलता है? तो आपके हिसाब से आज टुडे वेयर वी आर स्टैंडिंग, आपके हिसाब से मार्केट क्या बोलता है?
Okay. My suggestion, Nirav, will be like you said, जनता का बहुत सारे expectations होते हैं. I would say step back, relax. रोज रोज मार्केट को मत देखो. You are more likely to make mistakes doing that. आप अपने गोल पे फोकस करो, आप अपने SIP पे फोकस करो, एंड मार्केट जो करता है उसको करने दो. थोड़े थोड़े महीने बाद, थोड़े थोड़े साल बाद देखो, you'll be much happier.
Right. Right. So I feel that I feel this is amongst the most to the point response we have had to this question so far along this series. I feel there is also a very good message for people out there. Don't try to read too much into everything that's happening. मार्केट का काम है चलना, वोलेटाइल होना, उसकी फितरत है, चीजें होती जाएंगी, बट मार्केट चलता जाएगा. व्हाट रियली मैटर्स इज आप क्या कर रहे हो, राइट? व्हाट मैटर्स इज आप आपके पोर्टफोलियो के लिए क्या कर रहे हो. और आज जब हम मार्केट्स और पोर्टफोलियोज की बात करते हैं, एक बहुत बड़ा मुद्दा होता है एलोकेशन की. एक एसेट एलोकेशन अपने आप में अलग सा सब्जेक्ट होता है, बट उसको फिर कभी कवर करेंगे. टुडे लेट्स टॉक अबाउट एलोकेशन विद इन इक्विटीज. जब भी हम इक्विटीज की बात करते हैं, एक सबसे पहला फंडामेंटल क्वेश्चन होता है कि क्या हमें लार्ज कैप्स में इन्वेस्ट करना चाहिए, मिड कैप्स में करना चाहिए या स्मॉल कैप में करना चाहिए. बहुतों की जो अंडरस्टैंडिंग होती है लार्ज कैप, मिड कैप और स्मॉल कैप की, बहुत ही एलिमेंट्री लेवल की होती है. लाइक फॉर एग्जांपल, द ओनली थिंग दैट कम्स टू रिटेल इन्वेस्टर्स माइंड, इट इज बिकॉज आई रिसीव सच क्वेश्चंस, इज आई रियलाइज कि लार्ज कैप मतलब बड़ा कंपनी, स्मॉल कैप मतलब छोटा कंपनी. बड़ा कंपनी में कम रिस्क होता है और छोटा कंपनी में ज्यादा रिस्क होता है. लेकिन अगर बड़ा पैसा कमाना है तो छोटे कंपनी में इन्वेस्ट करना चाहिए, क्योंकि बड़ा कंपनी और बढ़ नहीं सकता. दिस इज द जनरल premise with which everyone is operating. So what do you recommend? Is this the correct lens, or is there a requirement for some more refinement in how we view this entire story or debate that happens between large caps versus mid caps versus small caps?
Right. So I think the broad brush understanding that large cap matlab badi company, that is obviously naturally correct. In India, because of the way the the definitions, especially the AMFI definitions guided by SEBI has been, large cap is largely for us the top 100 companies by market cap. तो वो define कर देता है. These are the top 100 companies by market cap in the country. The next 150 companies, which is 101 to 250 by size, by market cap, is what is defined as mid cap. That's the universe we play in. And everything below that, so 251 onwards, becomes small cap. So that's by and large the frame that we are looking at, right? Now, isme, like you rightly pointed out, the large cap companies are the ones which are the largest, the oldest, most established, the large industries also. And typically they tend to be well established, market leaders, etc. And with the and mature industries by and large. With that maturity, with the fact that these are large, steady, etc., you will have, of course, a lot more stability in the
Yeah.
medium to long term within the equity space. So equities themselves are volatile, we know that, but within the equity space, by and large, you should expect more stability. The small cap companies by the other on the other end of the spectrum will be, of course, the younger companies, and like most things which are younger, they are often more energetic, they can be riskier, they will take a lot more, they'll make more mistakes also. Often the models are not fully tested, industries are new, emerging, etc., so there'll be a lot more risk. But like younger things, smaller things, they can be energetic, but they can also make mistakes, so therefore the risk is higher.
Yeah.
The way we measure this often in the markets is that you look at compounded return over a long period of time, and you look at the risk as measured by volatility or standard deviation over a long period of time. And that, I think, by and large is borne out that larger cap companies and smaller cap companies, small cap companies can provide more absolute return over long periods of time, but they will take more risk.
Right.
Large cap companies will provide good return, but they are taking lesser risk. So that's the two extremes. In our mind, mid cap becomes a nice sweet spot. They're not as large, where they are so steady that there's no excitement, and they're not so small where they are making too many mistakes and therefore there's a lot of risk. So therefore, when you look at risk-adjusted returns, mid-cap becomes a very attractive space. And this is again looking at the potential for growth as well as the amount of risk that industry or that company has to take. So one way to look at this continuum is that you have to look at how much risk are you willing to take, and often that is also a function of how what is your investment time horizon. If you're looking for multi-baggers, finding it in a large cap is going to be more difficult by naturally, because these are the
Yeah.
most discovered, these are the most researched, these are already very large. You
Yeah.
will find that in the lower end of the market. But then you'll have to hold on for a very long time, and there will be only a few multi-baggers. So that's the risk-return trade-off one has to do. In the absence of anything, you can look at, let's say, how the S&P 500 is constructed, which is that you have roughly about 78% in large cap, about 18 odd percent in mid cap, and the balance is in small cap. So that's the broad way that the market index is constructed, looking at the top 500 companies.
Right, right, right. So you touched upon how does one distinguish between these, right? And how does a suitability sort of a thing work for these various market caps? पर और एक सवाल इसी से और एक सवाल उठता है कि अगर कोई मान लीजिए एक रिटेल इन्वेस्टर है जो पहली बार निवेश कर रहा है इक्विटीज में, राइट? एक स्टैंडर्ड सा अप्रोच होता है, एक बहुत ही ब्रॉड मैंडेट वाला, या तो मल्टी कैप या तो फ्लेक्सी कैप सॉर्ट ऑफ अ फंड से चालू कर दीजिए. बट what other option does a new retail investor have? मान लीजिए लॉन्ग टर्म के लिए इन्वेस्ट कर रहा है, 10 years प्लस शॉर्ट के लिए इन्वेस्ट कर रहा है, माना कि ये काफी लॉन्ग टर्म है, बट इज इट राइट टू रियली इन्वेस्ट ओनली इन दी लोअर एंड ऑफ द मार्केट की स्मॉल कैप हैवी या तो मिड कैप हैवी रखना चाहिए, या व्हाट इज द आइडियल फ्रेमवर्क विद व्हिच ही और शी शुड डिसाइड कि large cap, mid cap और small cap में कितना allocate करना चाहिए, just as a broader I wouldn't say thumb rule, but like a general framework that one should adopt while deciding such an allocation.
Right. Right. So clearly, Nirav, like you mentioned, I think you touched upon all the important factors, which is that आपका time horizon कितना है और आप कितना risk ले सकते हो. Now, keep in mind, risk आप कितना ले सकते हो, that can also change, which is what behavior has shown us based on what sort of a market cycle we are in.
Yeah.
So, there are studies which showed very interestingly that in a bullish market, when things are going up, we all feel very optimistic and the headlines are very positive, and we think we can take a lot of risk. And, we end up overextending ourselves often because everything is looking very, very, upbeat. And similarly, in a bearish market, when we actually could be or should be taking more risk, it's very difficult to do it because everything is looking bearish. Right? So
Right.
our own risk appetite can actually keep changing based on the market and the environment that we are in.
Right.
In which case, therefore, looking at that behavior, I would say it becomes very important for us to take a very, very almost, discipline is an overused word, but I'm still going to use it. A very disciplined, very considered view of how you want to allocate, and don't keep changing it very often. Be very, very conscious about why you took the call and stick to it. Right? So
Yeah.
therein, just going into small caps and saying, oh, okay, long time bet here, and I'm going to hold on for 10 years, etc. One could do that. But it's not necessary that after 10 years you'll be in a cycle where small caps are definitely on the upswing. You could well be in a cycle that time and large caps are doing much better. Right?
Yeah.
So will you be able to not regret the fact that in that cycle when you want to get out, one part of the market could be doing much better than the other is something you have to be careful about. And keep in mind, we've seen that across cycle. It's not necessary that आपने 10 साल hold किया है तो small caps have to do better than large cap. It's not necessary at all.
Right. Right.
And that's where I think the benefit of diversifying across the spectrum becomes important. So
Right.
that should you have liquidity needs, at least one part of the market will be hopefully much more attractive for you to liquidate at that point in time, and therefore you should be able to meet your objectives in a far more sensible, far more thoughtful manner than just being on any extreme.
Absolutely. I feel you put it absolutely right. I love the point that you made कि जो लोगों का जो risk appetite होता है वो market cycles के साथ बदलते जा रहा है. And मैंने खुद ने ये witness किया हुआ है, at least from the start of the pandemic to now the post pandemic. I feel market के पता नहीं कितने cycles हो गए हो, the way you slice or dice it, but risk appetites में fluctuation मैंने उससे काफी ज्यादा देखा है. Investors के बीच, for people who at the early onset of the pandemic, where they were risk averse, suddenly, come 2021, they all wanted to take as many risky bets as they want. And now, as we see, people are still once again getting to the edge of their seats. I feel you made a very important point. Discipline, I understand it is a word that is used over and over and over again, but I feel no matter how much you emphasize on it, you can never overemphasize on it. It is just absolutely requisite, right? It is the basic fundamental. So इससे पहले जब हम बात कर रहे थे, आपने एक जिक्र किया था मिड कैप्स के बारे में. You said that large caps are large and steady, and small caps में थोड़ा energetic होता है, mistakes भी होते हैं, but upside downside दोनों balance up होता है. और mid caps है कि it's a sweet spot in the market, right? काफी लोग जो है, जो mid caps और small caps को synonymously यूज करते हैं, जबकि you have made it very clear that it's a clear distinction. अगर आप रैंक देखोगे तो 101 रैंक से जो मार्केट कैप साइज चालू होता है, उससे लेके 250 तक का जो साइज है या रैंकिंग्स है, दोज क्वालिफाई एज मिड कैप स्टॉक्स, एंड दैट इज द इंडस्ट्री नॉर्म, राइट? I've also noticed that for a very long time, IDFC mutual fund never had a mid cap fund until now. You are launching your very first mid cap fund now. So, जरा उसके बारे में बताइए, more from a standpoint कि is it that the time is right to launch a mid cap fund? Like IDFC mutual fund has such a long standing track record as an asset management company. Why now? That is point number one. And two, how are you going to differentiate your mid cap fund, and what is your value proposition to investors investing in this mid cap fund?
Right. Right. So I think, like you rightly mentioned, Nirav, often many of our well-wishers, many of our partners have told us that, IDFC in the past has had so many successful schemes which have been really mid-cap, small-cap heavy, and therefore we've almost earned the reputation of being great stock pickers and very good at the mid-cap space. And clearly, many of our portfolios in the past have had a very overweight mid-cap, small-cap, or a growth-oriented stance than the peer group in the industry, if I were to look at it from that standpoint. And clearly, many of these strategies over long periods of time have generated great amount of wealth for investors. We're very happy about that. We're also happy about the fact that our team has therefore developed great expertise and experience and track record in being great stock pickers, which is relevant and important when you come to the mid cap and the small cap space. Having said that, while existing portfolios, whether it was our erstwhile Premier Equity, which is now Flexi Cap, or Sterling, which was a value play, etc., they have had even our tax fund for a long time was overweight mid and small cap, etc. While they've had mid cap exposures and we've got the track record, the feedback from the market was that as investors get a lot more sharper about allocations, like we were discussing today, people now want to allocate a certain portion in a dedicated mid cap fund.
Yeah.
Right? That's where we felt the need to have differentiated large, mid, and small cap oriented funds. So we already have a large. We had a small cap fund that we launched a couple of years back, and now is when we are launching a mid cap fund. Now, as we discussed earlier, the mid cap space, there are very good reasons for you to be in mid cap. Like we mentioned, over a long period of time, they have actually outperformed large caps. More importantly, not just in terms of rolling returns or absolute performance, in terms of risk-adjusted returns. And it's very interesting because most people don't realize that in rolling return terms, mid caps over 3, 5, 7 years have significantly outperformed large caps. When I say significant, it can be 5, 6% more than large caps. So it's a very large amount of outperformance. Yes, they take slightly higher risk, but on a risk-adjusted basis, it is still very, very efficient to go down that path. The second area is that mid-cap now, the way the industry has developed and the way it is defined, now offers you a lot more industries, especially emerging industries, where the size of the industry is not big enough for it to be in the top 100 in the country. But you get market leaders in emerging industries which are still in the mid-cap space. So what you're buying are very good companies, often market leaders, but the industry size is growing. And therefore, these are the large caps of tomorrow. And therefore, this becomes a sweet spot for us to get in and grow with the company. So the width of what you get versus a large cap is a lot more in the mid cap space.
Mm.
Third, we've also seen that while investors will want to look at timing, etc. The fact is, in the long term, timing does not matter. When you entered, really did not make a lot of difference. And research after research will keep proving that even when you got in, let's say on the worst time, in a month, the fact is, if you hold long enough, it all averages out and it makes money for you. Right?
Yeah.
In fact, if you look at valuations and you look at historic returns, often it is very contra in the way we think about it. So a lot of investors I know, and you would have seen, we look at past returns and invest. Right?
Yeah. Yeah.
तो पास्ट रिटर्न कितना किसका अच्छा है, एंड अगर किसी का 30% पास्ट रिटर्न है तो लेट मी पुट मनी देयर, और किसी का -10% पास्ट रिटर्न है तो लेट मी नॉट पुट मनी देयर. When actually a lot of studies will prove that it is better to do the other way around, right? Jiska minus
Yeah.
10% return hai, that is more likely to get the next wave right, because that is
Right.
where the growth is coming, provided of course you have a good manager. And जहाँ return आ चुका है, it cannot carry on. There's a bit of law of averages which will catch up over there.
Yes.
So that's
Yeah.
where we find the mid cap space right now. So when you look at, and of course, every day the market changes, but when I look at the, let's say, end of June picture. So as of
Yes.
end of June, if I look at the trailing P of mid cap was already lower than the average P
Yes.
in the market. So for the
Yes.
longest time, Nirav, I know many of the managers would have come and warned investors about valuations being very high. But when
Yeah.
valuation gets in the broad range of being around mean, it cannot be a very bad starting point. That's one way
Yeah.
to look at it.
Yes. Yes.
At the end of at the end of June, past 1 year returns for mid cap had actually turned into just about the negative territory. Right? And again, like I mentioned earlier, when you are starting with a 1 year return of negative territory, the probability of you making positive returns over the next 5 year actually goes up, because again the
Yes.
law of averages catches up. Not that again I'm suggesting that please come in and time the market and we're going to get the timing right. But the point is, it's not a bad time, like any time, to take that allocation if you're under invested. And
Right.
third is, keep in mind an NFO does have a reasonable period of time for the fund manager to do his stock selection and picking. So he's not bound to invest money on day one. You can actually spread it out.
Yeah.
So volatility that we are seeing in the market today actually plays to your advantage, because the fund manager does get a lot more time and opportunity to create a new portfolio based on all the experience and all the wisdom that we've got, to be able to generate something that should bring you reasonable returns over the long period of time. So these are some of the factors that we thought make it very pertinent for us to launch a fund at this point in time.
Absolutely lovely elaboration, Vishal. In fact, this brings me to my next question, which is also one of the questions we have received from the audience. I'll just elaborate upon it. See, Vishal, we have been, I personally have been tracking a lot many IDFC funds since almost easy over half a decade now, right? IDFC has been managing some of the funds fantastically. You said कि आपका जो premier equity था erstwhile, और जो वैल्यू प्ले में आपका स्टर्लिंग फंड था, ये तो ऑब्वियसली आई फील दीज आर फैंटास्टिक फंड्स. आपके जो टैक्स फंड रहा है ईएलएसएस कैटेगरी में, these have been fantastically performing funds. It has rewarded investors significantly well in the past also. And जैसे कि आपने कहा, एक बहुत ही यूनिक सा ट्रेड था जहाँ पे हमने भी नोटिस किया है ना. आई कैन ऑलमोस्ट अग्री एंड कोरोबरेट टू द फैक्ट दैट आपका जो मिड कैप का जो एलोकेशन रहा है इनमें से काफी फंड्स में, वो काफी हद तक इट्स ऑलमोस्ट एज इफ यू जस्ट गॉट इट राइट. You IDFC mutual fund seem to always get this entire mid cap play right. And I understand now why is this mid cap fund being launched. I feel it was long in the waiting. It had to come, and I feel now is a great time to launch it. बट इसके साथ ही ना एक बहुत ही पर्टिनेंट सवाल आता है, जो कि हमारे एक दर्शक ने भी पूछा है कि जो सेगमेंट है मिड कैप फंड्स का, ये काफी क्राउडेड सा कैटेगरी है ऑलरेडी. ऑलमोस्ट मान लीजिए देयर आर 20+ फंड्स दैट आर इन द कैटेगरी, और काफी लंबे अवधि की ट्रैक रिकॉर्ड ऑलरेडी है इनके पास. While you have experience and credibility to show in terms of your ability to manage and turn around fantastic results with your mid cap fund management, but that has happened through other funds, right? Not exactly mid cap. So what is a framework, or what is your thought process that you feel will distinguish and stand out that will help investors gain more out of this mid cap as a segment? I'm not talking about relative performance. वो ठीक है कभी ऊपर नीचे चलता जाएगा cyclical. I'm not talking about how will you always be number one performer, but how will you help investors get the best that the mid cap segment broadly has to offer? What's your framework?
So, Nirav, I think this is a very pertinent question. That there are already so many mid-cap funds. So, what will this new fund do, and why should I? How is this different? And I think, like with any fund, the difference lies in how you create the portfolio. What's the thinking behind the construction of the portfolio, risk management, and stock picking? All of these things put together. So the way we are looking at the selection process, I just want to lay it out for your viewers. The first thing we will look at is the governance or the sustainability of the companies we select. Because keep in mind, these are relatively under-discovered, as in it's not in the small cap space, but clearly sustainability and governance becomes the first thing to look at for a good company. Only if you pass through that filter will we then start looking at whether this company is using capital efficiently or not. So capital efficiency becomes the next way to look at filtering out which are the companies that comes into our investment universe. We then start looking at more specific factors that are unique to the company. So, if you have good governance standards and if you have good sustainability standards, you have good use of, you've used capital efficiently, then we start looking at things like what is your competitive edge in the industry you are, and in that industry are you scalable? Because keep in mind, this is about growth. This is growth investing. So you can be a great company, but the industry and the company really cannot scale up over 5, 10, 12 years. Then what really are we investing behind? So competitive edge and scalability becomes then the other two filters or factors we will look at. And finally it becomes, at this price, is the risk reward equation acceptable to us or not? Because yes, you can have a great company, but if it's already overpriced, then the risk reward is not working in your favor, because you can buy it, but the return will not actually justify the level of risk you're taking. So that's the way we've been looking at our construction of portfolio. We think it is a very well defined framework, and we think that this really works. And we've seen this, and we've looked at how this has worked with other holdings we've had where we've held it for years together, 8, 10, 12 years. And that discipline brings you the ability to actually have multi-baggers. Otherwise, it's one can get tempted to sell it off after the first bounce or the second bounce that you see in a stock price. Right? So that's very important. End of the day, coming to the crux of the other question that you asked, I think once you look at the portfolio, you should look at how a mid-cap portfolio constructed through, let's say, IDFC is different from what you already hold or what you may have in other portfolios. So what's the level of overlap, and what's the style difference that you see in this, right? And there you will see that often many of our portfolios are constructed very differently from the average in the market. What that also means is that we will often be out of step with the market. So
Yeah,
we will have big area, room of underperformance versus peer group. Keep in mind, because the peer group may be moving in a certain different direction than where we are. But it, as you've seen and you mentioned, it averages out, right?
yeah,
And that diversification is important, because if all your mid cap funds are doing exactly the same thing, what's the point of buying another one? But
right.
like you would have seen with many of our portfolios, the portfolios are very different.
Yeah,
It takes a slightly different view from the average in the market. I think the conviction of really holding it through the cycle is something that's been demonstrated across many of our funds. And those would be, I would say, and like I said, the entry point we think is quite reasonable for you to take a long-term view on this. Now, I know I'm digressing a bit, Nirav, but I do want to talk about why we think this may not be a bad time for you to start looking at this. This is something
oh
that
please, in
we
fact
really
this was
want
going
to,
to be my next question. Please do.
yeah. See, and we have to be careful here, and that's why I want to spend some time on this.
Yeah,
The global economy is slowing down. We must appreciate that. So let's not look at the current bounce and say, oh, everything is great. There is a lot of headwind in the global economy. We will not go through all the reasons, but clearly, COVID and the post COVID flush of liquidity provided by central banks the supply squeeze, the entire commodity price hike, war, energy prices, and now all of that showing up on demand. All of that has led to a complex set of factors where an already slowing global economy is now slowing down even further. Because of so much liquidity being flushed in, inflation is getting to a level where the developed market has not seen for decades. In India, we look at 7%, and most of us are not worried because we've seen 10, 11, 12, 15, 20% inflation. So, 7% is not such a big deal. And it's just 1% more than the RBI's own band. If you look at 2 to 6% being their comfort zone, with 4 being an average, versus 6, you're at 7. So, big deal. But look at developed markets. Your comfort zone is 2%, but you're at 7 to 9%. So it's way off where your comfort level is in terms of inflation. So inflation is high, supply chains are broken, commodity prices are high, and therefore a lot of action is being taken by central banks to hike interest rates. And this is against a backdrop of a globally slowing economy. So things on one side are not hunky dory. But as they say, you have to be greedy when everything else is falling apart or when things are very fearful. On the other side, when you look at India, domestic factors are quite robust. Global factors are actually improving. So we've already seen a lot of pain and damage in the past, but now as we, increasingly you'll see that things are getting better because with the action taken, demand is coming off. Some of the commodity price cooling is already beginning to happen. Oil is again, getting to a better zone than in the past. And the expectation is that eventually central banks will start focusing on getting back growth. And in this environment, while in the past FPIs had pulled out money from emerging markets, including India, after that first wave is over, you will want to look back at growth. And that's where I think India shines. When you look at growth, despite successive downgrades in expected GDP levels in the future from 9% to 8.2% to 7.4, 7.2, depends on who you follow, it's still 7% plus growth.
Yeah.
7% plus growth at a real level, plus inflation, plus general the ability for public listed companies to be able to make some profits, you're still looking at mid-teen type of earnings growth in India. Mid-teen type of earnings growth in India actually produces a very, very good growth story relative to everything that is available. So the long story short, the point is don't have very, very high expectations from equity markets like you've seen in the past. So if you are a reasonable, if you're a recent investor and you saw 100% growth in 1 year and then 40% growth the next year, etc., please don't expect that going forward. But when you look at your options and you say, okay, I can invest in these 3 or 4 asset classes, you will find that equities are still very attractive. Even if you do not have PE expansion and you do not have too much of a contraction either, earnings growth is still quite robust.
Right.
Thankfully, Q2 earnings growth that we've seen so far still seem to be much better than what many people feared. Yes, there are some downgrades, but the downgrades are not as much as what large parts of the market were anticipating. You therefore have to look at the next 5 to 8 years as the phase of growth that India is getting into. And that I think most people will agree. There is a lot of opportunity, a lot of action that one will witness. And that's why you should really be, getting into this cycle of equity.
Yeah, absolutely. I completely concur with what you have been saying, Vishal. I feel, although it may not be 100%, but it never is. But the stars are in fact aligning for India and Indian equities, especially. And the growth story that you explained, I feel it's a really structural growth story that's underway, and there's a lot. There's a lot of opportunity that still lies way ahead of us. It may not even be within our realm of vision right now, but there's still a whole lot that lies ahead of us, and also as investors. So that's great, Vishal. Also, I feel the fact that you spoke about how your portfolio is going to be a very distinct portfolio in the mid cap fund. I feel that lends a lot of confidence in terms of how you are, how the fund houses trying to be bold and stand behind their decisions at the same time. Obviously it carries its own sets of risk, because if you don't toe the line, it also makes you as vulnerable as exposed to greatness at the same time. So I'm really glad that your IDFC as a fund house is really trying to have a very distinct and independent approach while managing funds, and also bringing the best to the people in the best way possible. So Vishal, इसी बात पे ना एक आखिरी सा सवाल है, I mean not आखिरी but just before yet another question, but this one is important. जैसे कि हमने बात की कि काफी सारे ऑलरेडी फंड्स है, आपने कहा कि आपका पोर्टफोलियो भी डिस्टिंक्ट रहेगा, साथ ही आपने कहा कि एक लोगों की टेंडेंसी होती है जो बेस्ट परफॉर्मिंग फंड है उसमें इन्वेस्ट कर लेते हैं और जो लो परफॉर्मिंग है उसमें नहीं करते। एक और टेंडेंसी है कि लोग बिना ट्रैक रिकॉर्ड वाले फंड में तो बिल्कुल भी इन्वेस्ट नहीं करते, बिकॉज उन्हें समझ ही नहीं आता। if the decisions are based performance, then performance needs to at least be there in terms of track record, right? So ये काफी लोगों को काफी एक कंफ्यूजिंग सिचुएशन में डाल देता है। तो आपके हिसाब से मान लीजिए चाहे लार्ज कैप हो चाहे मिड कैप हो, what are the set of principles or parameters that a person should look at before selecting a fund within a category, be it any category, but क्या पर्सपेक्टिव से उन्हें वो फंड सिलेक्शन करना है? आपने ये तो बता दिया कि हिस्टोरिकल परफॉर्मेंस इन आइसोलेशन मींस नथिंग, एंड आई फील वी कंप्लीटली एग्री। अगर ये नहीं देखे तो क्या देखे, कैसे डिसाइड करें?
And that's a tricky one, Neeraj. Nirav, to be very honest, I think the jury is still out there because everyone is still trying to figure what is the best method to select the next winner
Yeah.
among fund houses. I would look at, and I'll just share what I think, and that may not necessarily be backed by any data because, like I said, the jury is still out there. There's no conclusive data which says that look, this is the best way to pick, the winner for the next 3 years or 5 years, right? I think it's important to understand the manager and their philosophy. What are they trying to do and how they are trying to do. And I would go by the fact that look, if that itself is not clear, then it becomes a bit more of a black box. And anything with a black box is like that you're just going with luck, right? So I would go by the fact that firstly is the manager and the team clear about how they will construct the portfolio itself. Whether they get it right or wrong is a second order
Yeah.
question. But वो तो आप clear रहो ना. Otherwise, this is a market where you can get very, very confused very quickly. The best of people make that mistake.
Right.
So if you want to be disciplined, firstly, defining a framework is very important. So as an example, I'll share with you that, we have identified within the IDFC equity management framework 7 factors that generally are important when you select a stock that goes into a portfolio.
Hmm.
Now, the fact is, all 7 factors, if they are all right, if you checkbox everything, it's unlikely that the price will be attractive. सब
Yes.
कुछ अगर ठीक है, तो then the market is not blind to be completely missing it, right?
Yeah.
So what we've done is in each of our portfolios, each of the funds that we manage, we've defined the top 3 that we will look at. Just recognizing the fact that look, everything will not be perfect at any given point in time.
Yeah.
So what are the factors and how does the fund manager select what we did? I just took you through how we will select the mid-cap fund portfolio. So just
Yeah.
defining that gives you a lot of clarity about how the fund manager thinks and what they will do. And of course, that philosophy, that management commitment will show up in the portfolio. Now, as an investor, if you think that is a philosophy or that is a selection process that resonates with you, and the manager has the track record and the skill and the ability and the capacity to actually deliver against that, then I would say that's a good starting point. And eventually, once you have a portfolio, I think looking at what is the overlap between that portfolio versus other portfolios, other schemes that you have, maybe another way to look at it, right? So, for example, just buying 3 flexi cap funds may not necessarily give you a lot of diversification if all of them have 80% holdings in the same set of stocks, because everyone is pretty much doing the same large cap orientation, etc. So I would say then just buy one. Why are you buying 3? And buy something which is completely contra to this if you really want diversification.
Right.
Now, having said this, Nirav, I will also counter my point with something dramatically different, which is, if I were to say, I would say we end up spending just too much time in trying to select the best product when studies have proven conclusively that all of this timing and product selection and manager selection will end up actually with less than 5 to 10% of the actual impact your portfolio will have or the return your portfolio can generate. The big gorilla that we are missing is allocation.
Yeah.
So we end up spending 90% of our time doing a lot of research about which fund to buy, and maybe 10% of our time thinking about the allocation, how much money to put behind which strategy or which asset class, when there is a lot of research which says that what is important is actually allocation. So you
Yeah.
should be spending 90% of your time on the allocation itself. Once you
Right.
get your allocation right, frankly, this will not matter as much. So I would say worry more about the allocation, worry more about how you are placing your money, how
Right.
much where. That matters a lot more.
Right. So basically, we get our basics right. And, this is also for the audience. Guys, do not, like I said at the start, also do not try to, just like you shouldn't try to overread into situations and developments. You must also not try to overanalyze and analyze in a way that takes you away from acting in the right manner or contrary to what basic principles are. And one of the very such basic principles is of allocation. सो विशाल, आपने कहा था शुरुआत में कि ये काफी ट्रिकी सा क्वेश्चन है, बट आपका जवाब तो बहुत ही ज्यादा क्लैरिटी दे गया है हम सभी को. सो इट इज द रिस्पॉन्स दैट यू शेयर्ड is almost the antithesis of whatever you were calling tricky. I feel this has given amazing clarity to an investor. And talking about the gorilla, the big gorilla in the room, it reminded me of this story where there was a study on a monkey throwing darts on different stocks and the performance on it. I feel it concludes the same thing that you just said, that चाहे आपका सिलेक्शन थोड़ा ऊपर नीचे हो गया कोई प्रॉब्लम नहीं है. दी what really matters is आपने allocate कैसे किया हुआ है. I feel that's really important. So right now, Vishal, as we are talking about the सही तरीका of investing के बारे में हम बात कर रहे हैं, right? So, let's zoom out a little bit. I would like to, just take a step aside and, have a sidebar sort of a conversation with you, asking, Vishal, you are one of the most seasoned fund managers out there, and I'd say, asset managers out there as a leader in the segment. You have seen various seasons. You have, overseen the management of several funds, successful funds, right? And I'm sure you yourself are a brilliant fund manager. But क्या अभी कभी ऐसा हुआ है, चाहे बहुत पहले, बट क्या विशाल कपूर ने कभी गलतियां की है इन्वेस्टिंग में, अलग पॉइंट्स ऑफ टाइम में? अगर की है, we would love to hear about it. What are those mistakes that you feel you would have made at a point in time that you really do not want investors, the new investors especially, the young investors of today, to repeat?
तो नीरव, थैंकफुली मैंने बहुत सारी गलतियां करी हैं और अभी भी करता रहता हूँ. सो एंड आई एम सेइंग थैंकफुली बिकॉज वो नहीं करी होती तो सीख नहीं मिलती है. लाइक जैसे कि आपको साइकिलिंग सीखनी है, अगर आप नहीं गिरोगे तो आपको पता ही नहीं चलेगा कि क्या क्या हो सकता है. तो थोड़ा बहुत ये
Right.
सब करना जरूरी है. थैंकफुली वो अपने पर्सनल पैसे पे किया है.
Right.
द फंड इज ऑब्वियसली वेरी वेरी सेपरेट.
Yeah. Yeah.
सो आई थिंक, देखिए, हम सभी जब मार्केट में आते हैं, मार्केट में इट्स एन इंटरेस्टिंग स्पेस. आई डोंट थिंक एनी ऑफ अस विल डिनाई दैट. आप जितना देखना शुरू करोगे उतना वो एक्साइटिंग लगता है. द एबिलिटी टू मेक मनी कैन बी अ बिग ड्रॉ. इट कैन रियली सक अस इन, एंड वी स्टार्ट बिलीविंग कि वी आर एक्चुअली स्मार्टर देन द रेस्ट ऑफ द मार्केट. And keep in mind that this, because the market is such a dynamic place and it has so much opportunity, it also attracts some of the best brains. So and I think that humility upfront to say, look boss, there are a lot of very smart people out there in the market, and मैं ही एक अकेला नहीं हूँ that we figured out or I have figured out and others have not. I
Yeah.
think that can take some time to understand. Because एक चीज वो भी होती है, beginner's luck, right? So when I started investing, it seemed so easy to make money. आपने बुल मार्केट में आप जनरली शुरू करते हो, आपने 5,000 रुपये लगाए, उसके 7,000, 8,000, 10,000 बन गए, एंड यू से अरे ये तो बहुत अच्छा है. एंड
A
इन सम
special
टाइम
message for those who started post pandemic, right? Those who made their first investment in the last year.
absolutely. And then the same volatility on the way up, when it sort of gives you this opportunity to make easy money,
Yeah.
will completely throw you off track when it comes on the way down, right? And then a lot of people will say, "यार ये तो मेरे बस का नहीं है, छोड़ो इसको, बाहर चले जाओ." And that's the big mistake you're making,
Yeah.
because all said, this is a growth asset. It is the best way for you to counter inflation over the long term. And जो वो नहीं समझ में आता है, जिनको वो नहीं समझ में आता है, they really, I feel, lose out, and I feel sad about that we were not able to convince them. So my learning, Nirav, if I were to think about it in a nutshell, is the following: that Don't try and fight the volatility in the market. People say, "Arey, markets are volatile, markets are so volatile, etc." Well, volatility is part and parcel of the market. If you did not have volatility, you would not have a buyer and a seller at the same time, right? If
Yeah.
everyone has the same view, then why will you have any this other side?
Right.
So the fact is the market should have multiple views. That's what makes the market. And when you have multiple views, volatility is good. If you did not have volatility, you would not have opportunities. Don't
Perfect.
try and predict it. Don't try and benefit from it. It's just a given. Take it. It's there, right? You cannot control it. So if you think you can control the volatility, you must be either a very very large FPI with a very fat check writing ability, or you're just delusion. You really don't understand what you're
Yeah.
getting into, right?
Yeah.
Now, if you cannot control the volatility, what can you control? Let's look at that. Now,
Yes.
there are three things to my mind. It's absolutely in your control. No one else has control over that, and these are absolutely, mathematically proven and therefore absolute truths as we understand today. The first is compounding. It's a concept that is still underrated because we don't understand. Our brain thinks linearly, so we don't understand the power of compounding intuitively, right? We've seen this through the COVID curves, unfortunately, कि वो शुरू होता है तो लगता है ये 50 केस है 60 केस है क्या है, वो देखते देखते वो 2 लाख हो जाते हैं. That's when you understand how quickly compounding can work against you also, and similarly
Yeah.
in returns as well. Now compounding needs time. That's when it works best. So
Mm.
understand the power of compounding, understand that an investment needs time. So the earlier you can start, the more time you can give it. You're just letting maths work in your favor.
Yeah.
इसको और कॉम्प्लिकेट करने की क्या जरूरत है? आप एक बार वो मैथ्स करके देख लो. If you haven't, just go through that example of that. That it's a beautiful example from the apparently way back from the Indian ecosystem, when the king called someone to play chess, and the
Yeah.
person said कि आप एक grain of rice रख दो एक square पे, and दो कर दो और फिर चार कर दो and आठ कर दो
Yeah.
and डबल करते जाओ. And king said, yeah, इसमें क्या बड़ी चीज है? But the
Right.
fact is कि by the time you come to the 64th square, you
Yeah.
have, from what I understand, something like 18 to the power of 18
Yeah.
grains of rice that is required, which is like more than what the entire country could ever
Yes.
produce. So you
Yes.
don't realize it intuitively कि यार ये डबल डबल करते हुए 64th टाइम तक इतना बढ़ जाता है.
Hmm.
So use compounding to your favor by giving time to your money in the market. That's a very simple thing in your hands. So why are we confusing that?
Hmm.
The second thing you can control is risk through diversification. So risk है market में, volatility will bring risk as well, because
Hmm.
things will go up and go down. Your asset will not do well all the time.
Yeah.
How much risk you want to take is in your hands through diversification. So use
Yes.
diversification to your to your favor in that sense. So why you not diversifying if you don't want the risk? Over diversification also, or the illusion of diversification, is something you have to be wary of, I would say. Right? So that is the other thing I would say is something that you should keep in mind. And the third reality I would say that you have to appreciate is that businesses and therefore markets have cycles.
Yeah.
So just because you are in one cycle, don't think that will continue forever. What goes up will come down, what goes down will go up. That's just the nature of the way, the world, right? So there are some
Right.
things that you can't fight against, and cycle is not something you can fight against. There are macro cycles, there are micro cycles, all of those things you can play, but
Hmm.
understand that. So I would say ये आप तीन चीज सोच के रखो. Give your money time in the market, diversify to manage risk, and understand that there'll be cycles. What goes up will come down, and vice versa. I think that has helped me quite well in not making more mistakes than I would have otherwise.
Absolutely. I feel these are absolute pearls of wisdom, Vishal. I am so glad and grateful that we got a chance to hear this and got an opportunity to have this conversation. This brings us to the end and the close of today's episode. But I'm so glad, and I'm feeling like there's just so much that I have to take away from this conversation, and I hope even the audience has a lot to take away. So guys, generally we do a Q&A later, but today as we were getting more and more questions, I also included as a part of the conversation. So if any of you would have missed it, just rewatch the video. It's still there on the same link. So Vishal, back to you. Thanks a lot. I feel this was a wonderful and wholesome conversation. I you know I don't know if it's right, but it was a nutritional conversation. It was nutritious. There was so much to just take away, and so much to learn to just improve the way each one of us should manage our own personal finances. There's a lot that you shared today. Thanks for the time, and all the more grateful for the insights and perspectives that you've shared with us today.
Thank you, Nirav. Thanks for inviting me. Thanks for your patience and and to your entire audience, and the very kind words that you shared. It was my pleasure, absolutely, and wish you all very happy investing.
Thanks a lot, Vishal. Thank you. See you around.